Fellow traders, and welcome to part 2 of my order flow analysis. So in the last part that I did on Monday, which was my 100th video, we talked about the basics of tensor charts and how to look at order flow analysis and how to use that when day trading. And then we went a bit deeper into not just how to use the website and what each feature meant, but we talked about a strategy using the trades counter of buying when everyone sells and selling when everyone buys. When this gets very high, when there's a lot of green, we want to sell, a lot of red, we want to buy. Yeah, so now in today's video, what we're going to do is we're going to go a little bit over what we talked about in Monday's video and go a little bit deeper into it. And then I'm going to talk about also how to interpret each market stage with order flow. And then I'm going to talk about the market top that had recently occurred. And then finally, we're going to talk about a new strategy that you can use that is potentially even easier than the trades counter. And you can use it historically as well. And that's going to involve just this. Just volume and price with that information. Yeah, so without further ado, let's get started. Okay, so to start off with, let's look at three things that are occurring in this picture. I know it's kind of weird that the camera's in the top left, but I had to put it there because we're gonna be talking a lot about the counter ratio that's below here, and I couldn't put the camera down there because I didn't want to obscure the data. So basically here, price is at resistance. And I also showed it here. We can see price is at resistance right there, right? Many orders are above price, not too many orders below price here. As you can see, we have a canceled order here that might cause resistance. Canceled orders are important because when an order is canceled, it could turn into hidden support or hidden resistance. So what I mean by that is if you see an order here and then it was canceled, it's a large order, that might actually become future resistance because what might be happening? A bot's going to want to sell here, or a large trader is going to want to sell here. And what they're going to do is they might influence the market by putting actually a buy limit order here below price to try to spoof the market, to try to make the market artificial demand, to make it go higher. Traders see a buy limit order below and they really want to buy because they see high demand. So they're going to put an order here and then an order here to try to influence the market. And then what they're going to do is when price gets back up to that level, they're going to put that sell order immediately at the top of the order book. So what's going to happen is, price will be like selling upward, nothing too new, and then out of sudden you'll get like 50 Bitcoin limit sell order. That's a movable, like moving sell wall downward. That's just because of these hidden levels of resistance and support. And so that's just something to look out for. And this did cause very powerful resistance. Most importantly, the trades counter is quite high. Basically, everyone has bought, as you can see. I don't need to read out all the values like I did in the last one. You can just see them right here. A lot more buying is occurring than selling in the 20 and on the 5 minute. Many more offers as well than bids. What happened? Well, price goes down, as you would probably expect. And I took another picture here because I was curious, is price going to continue moving down or upward? So I took a screenshot. Let me show you guys what I did. Let's take a look at this and pretend like we actually don't know what's going to happen in the future. Okay, we see some large orders below price that are active. They're not canceled. As you can see, if price does go down, they would fill. This could be spoofing, where artificial demand is being created, which would cause the market to probably move upward. That's good. We have many more bids than we do offers, as you can see. That can also be seen there. We don't have too many canceled orders or active orders above price. And also, you might say, wait, isn't that a canceled order? No, that's a filled order. That order was placed right there, and then it was filled. So it's not canceled. There's canceled, filled, active. Those are the three kinds of orders. Active are also known as pending orders if you read an article on it. Yep, and then we see the counter ratio is overwhelmingly oversold. A lot of people have sold here, as you can see. What happens? Well, you can probably guess. Price goes up. Too many people have sold. Now I took another picture here because I thought that the market was going to turn bearish. And let's take a look at that. So I thought the market was going to turn bearish here. We have a lot of offers above price. We have a high counter ratio, as you can see, of 4.89. This is the 60-minute counter ratio, so that means the last hour. There have been 4.89 as many buyers as there have been sellers. That's not healthy. That's not good for an established uptrend. Many offers here, also seen here, and then the buyer count ratio is quite high. 87, 135, 141, and 200. A lot of people have bought. And they're just beginning to sell here. Yep, price goes down. Now here's where things got kind of crazy. Price went back up. And one may think, wait, look how bullish that looks, right? Doesn't this look like a spot you want to buy? Well, let's take a look at the data. 52 Bitcoin were bought relative to 25. Okay, last 5 minutes, that's a lot of Bitcoin being bought, but not crazy. Okay, 270 Bitcoin bought in the last 20. That's pretty bad. 303 bought by large retail traders in the last 5 minutes. That's a pretty bad sign as well that we're reaching a market top. Now the kicker, 900 Bitcoin were bought in 20 minutes. By my math, that's about like $10 million worth of Bitcoin. More, I think. This times that. That's just very not healthy for the market. You can also see that right here as well. A lot of buying is occurring. A lot of offers above price. Many tiered offers up here. As you can see, not too many bids. So what's going to happen with all this Bitcoin being bought? And that's the market top. Lucky enough for me, I actually went on Tensor Charts and I saw that this was happening. And that's why I took a screenshot. I had a position that I had got into around here because, no, I think I got like here, pardon me. And I had the choice of either to hold because I was like, oh, isn't this a breakout above resistance, or I could sell. Fortunate enough for me, I sold. I sold at 11,693. I sold right here. When the market began to move down, I just used a market order. I didn't want to try to risk a limit order because of just how horribly bearish this looked. So I sold here, and then I was actually about to buy back in because I saw that price was moving upward after I had sold. And I thought that this was a bear trap, where large market participants are trying to get you to sell so that they can buy. But then the crash occurred, and I have not made a trade since. And I'm pretty happy about that because we went down from, let's look at 10,693 to a minimum of like 18%. So I saved myself that much, and then currently like 12. So that's why we use order flow, so that doesn't happen. And also RSI, MFI, these indicators might not indicate a major market top. They probably won't. They might just indicate overbought if anything. And some technical indicators, yeah, they might work, but order flow is telling you not any derivatives of like technical indicators. They're derivatives of price and volume. It just tells you the exact volume in the change that you get in volume in a short period of time. And that's going to give you so much information and a very large edge over other traders. And that's why I was able to deke out of this market before it got pretty ugly. Okay, so now let me transition that into the main topic for today's video. So one thing I want to say here, just because everyone's buying doesn't actually mean that we want to sell. Because there are two main types of markets. There's established trends and unestablished trends. In an established trend, we want to act the opposite of what everyone else is doing at once. Look here. We have a counter ratio of 5 right here, as you can see. And it looks like, if you didn't know this, and this looks like the market's moving upward and then hits that counter ratio of 5. Again, that means that at least 5 times as much buy volume had occurred here than sell volume in the last hour. This is a terrible sign for the market, and this caused a market top. But there was also a counter ratio of 5 down here when price broke above resistance and began the uptrend. Let's take a look at what that actually looks like. We have consolidation here. This is an unestablished trend. The market is not in an uptrend here, not at all. And then price breaks above on a very, very high counter ratio, and then price begins the uptrend, moves much, much higher. Why does this occur, and how would you know to buy? Breakouts like this occur, and the very high buy volume occur because of 3 reasons. 1, typically traders are going to put their sell orders at resistance. It wouldn't really make too much sense for a trader who's buying here, trying to sell here, or buying here, trying to sell here. It wouldn't make too much sense for a trader to try to buy and then sell above resistance because of 2 things. 1, if his order actually does get filled, price is probably breaking out anyway, right? So probably a pretty bad place to sell. 2, he wants to sell before people sell, right? He wants to sell at the best price possible before other traders sell and front run him. He wants to have a realized profit. So that's why traders actually like to put their orders at resistance or maybe even a little bit below like they did here. And then that caused price to momentarily move down. So what that means in essence is that when price does break above resistance, there's really not going to be too many sell orders here because all the sell orders are going to be around resistance here. And if price pierces through that, all those sell orders vanish, then it's open season for price to continue moving upward. Second reason, many shorts are going to put stop losses above resistance. Stop losses for shorts are going to act as buy orders because that's going to cover a short. Stop losses also are market orders. They are not limit orders. So what that means is that when the market does break above resistance, many buy market orders are going to hit. There are stop losses, and that's going to propel price upward. Third reason, fear of missing out. Traders who see price break above resistance are going to get pretty angsty and want to buy into the trend. They don't want to miss out on a potential profit. So what they're going to do is many traders are going to begin to buy this. Typically, they tend to buy at the market top, the minor market tops here, major market top. But a lot of traders are going to buy this because they see price breaking out bullish, and that's going to, again, propel price higher in the short term. So for those reasons, we actually want to see a very high counter ratio. That counter ratio 5 is actually pretty healthy for the market when it's breaking above resistance. If that counter ratio was like 1 or 2 and not too much buying occurring relative to selling, that actually might turn into resistance and not even break out. Because if not enough people are buying it above consolidation, then the market might not have enough fear of missing out to carry it higher. So I know that might seem a little bit confusing that, wait, in the last video you said always buy when everyone sells and always sell when everyone buys. I would say around 80% of the time, maybe 90% of the time, you want to do that. Absolutely correct. In an established trend. In consolidation, it's completely different. This is established, so you're looking for an overbought point. This is not. So if you can just get good at identifying consolidation, identifying a downtrend, identifying an uptrend, then you can begin to look at order flow and then look for extremes in order flow like that and trade against that extreme and make the maximum profit possible. So that's just a little note on overbought, oversold versus a breakout or a breakdown. Okay, now let's talk about the main topic for today's video. So like I had said before, the main topic for today's video is not to really look at this as much, but let's just focus on one thing and 1 or 2 strategies that we can use to gain from that in a short period of time. Because I know if I just throw a lot of things at you, it's going to be kind of hard to remember. In the last video, I did only go over one thing, which was just the trades counter, which I'm happy about. But today we're going to look at candlesticks, buy-sell distribution, and volume buy-sell distribution, and also the counter ratio as well. So again, this counter ratio is just the 60. This is just going to represent the last 60 minutes of how much buy volume relative to sell volume, of course. Negative is going to be more sell, positive will be more buy. Volume, within each candlestick, like I had said in my previous video, it's just going to tell me how much sell volume occurred relative to buy volume. And if I turn on delta, that's buy sell. If I turn on delta, it'll just be the absolute value. So you can see here, selling is slightly higher than buying, so you get slightly filled. Here, selling is much, much higher than buying, right? Because there's really no buying here. And that's going to get you those, they're called filled volume candlestick bars. So what can we do with this information? Well, you can use buy, sell, or delta. They're both going to tell you a good amount of information. I like to actually use both. I look at buy, sell to just see how much volume was occurring, and then I like to turn on delta because it's a little bit easier to look at. The strategy that you want to do is we want to identify an established trend, and we want to identify when we see a filled volume candlestick. When we see a filled volume candlestick, we are looking to trade against the market. Let's take a look at some examples here. Well, to start off here, price was beginning a bit of a downtrend, but it had 2 major filled volume candlesticks, meaning that many sellers were probably already absorbed in this market. So the market really had a harder time moving downward, as you can see here, and then it turned upward. And this was also the 38.2 retracement of this move to this move, if you're interested in Fibonacci trading as well. So if you notice, what can you do when you're actually trading with this strategy? Well, if you notice here that this much selling had occurred, and then you see a slowdown in price, this could be a very good buying opportunity and make a quick profit like that. Let's look at some more examples. Here, yeah, oh, this is great. Here this is a mix between overbought and a breakout because we have resistance forming here, right? Resistance, and then price breaks above resistance on a very high, on a filled volume candlestick, as you can see. I can't really say if that's bullish or bearish. I mean, I would say this is bullish because it's breaking above consolidation. A lot of people are buying, and that's good. But it's bearish in the sense that it's happening so late in the uptrend, as you can see, relative to the start of the uptrend here. Like this is much more bullish, I would say, than like this. But this did cause price to go higher, as you can see with the filled candlestick. But the more important thing is when price was already going higher and there's no more resistance to clear, we suddenly had a filled green volume candlestick. This would be a warning sign. This is not good. This is saying that at least, I don't want to say at least 5 times because the counter ratio is not relative to that. But if we just go to buy, sell, and look at the exact distribution within that candle, if you look here, basically all buy volume in one sell. And if you want to know just how much sell volume that was, we can actually look at that with volume right here. It was so small. The selling here was so small relative to the buying that it didn't even show up on the volume candlestick because this is scaled to the highest volume, of course. Delta might actually not tell you that, but turning on the buy sell will give you the information. Again, this is when you want to short or sell. Right here is just a really good opportunity to trade against the market because price is not in a breakout formation. It's clearly not doing that. And also, I apologize for like the zooming in and out because the sensitivity is not fantastic right now, so it's like it's gonna do that. So sorry for that. Yep. So another example here. Yep. Price is moving upward, and we break above resistance. So here we probably don't want to sell. It doesn't make too much sense yet. We might want to wait for a little bit, and then when we wait, we see a volume spike with a filled volume candlestick here. Also, the counter ratio for the 1 hour was at 3.81, which is not fantastic. That's a lot. That's 3.81 as much buying as there was selling. We could be reaching a minor market maximum. If you look here, let's look at the buy-sell heat map. Yeah, basically everyone just bought here. We also had a price tail, as you can see. If you hit C, the button, you can get candlesticks, as you can see. This is a really good spot to sell, and yeah, so you could have sold here again, right here. You can see that this is a filled volume. This is a filled candlestick, right? And we also have a decently high counter ratio of 236. This is a really good spot to sell right there. Now you might say, wait, but this one was as well, right? Yes, this one does have a very high relative volume, as you can see here. It's a filled candlestick bar, but it's breaking above resistance, right? Resistance is right here. It breaks above. This one's not. And that's really the distinction that you have to make. When price is breaking above resistance and you see a lot of volume, that's fine. But when you see price breaking above no resistance or very little resistance, like this example here, yep. So price barely broke above resistance here, but this wasn't really resistance anyway. That's a bad sign. And I would say it's more of a neutral sign with the example that I just showed here of those filled. This is more neutral. But this would have been a decent spot to sell probably because you could have bought back in here or just protected yourself against that. But yeah, I could just keep going through these examples forever. I mean, there's this one right here, filled green volume candlestick. That's also a candlestick spike. I don't know if I've already covered that one. Maybe I have, but it still stands here. Everyone bought here. Price does break above resistance, but we're in a very clear established uptrend right here, and then price goes down. Let me look for some examples of oversold because I think I've given you guys a lot of overbought. Here we have price breaking below support. This is not a spot you want to buy. And I know price does go up, but this is a pretty bad spot. Why? Well, support is created from here to here. And when price breaks below support and we get that filled volume candlestick, we don't really want to do anything. We don't want to buy or sell. What we're looking for is price to potentially go a bit lower, and then get to a point where we see filled red volume candlesticks, where just basically the entire market selling, then we want to buy. So that could have occurred here, as you can see. With this is not completely filled, but it's a lot more selling than there is buying. So that would have been a decently good spot to buy. And here as well, you see this, like right here. I haven't covered this one. Filled green volume candlestick occurs here and occurs here, and then price goes down. So yeah, again, like I'd said, this one as well. You can see that price has a filled volume candlestick, showing that there were many more buyers than there were sellers. And yeah, like I said, I could just go over this forever, and up here it occurred as well. But basically, just the basics of the strategies is of this individual strategy is to identify the trend first of all, and identify that support resistance before you even look at order flow. Because if you don't identify price context and what price is doing, you might be duped into buying at a really bad spot or selling at a really bad spot. Instead, if you can draw support resistance, like draw support here, draw resistance here, when price breaks down below support here, you're not going to buy just because you see that filled red candlestick. You're just going to wait because you know that price is breaking down and that it's okay for price to break down on very, very high volume, because that could cause a continuation of the trend. So yes, that's basically all that you're looking at. You're looking for those filled candlesticks. And I'm using the 5-minute right now. You can absolutely use this on the 1 hour. It will actually probably work better on the 1 hour than it would on the 5-minute. Because basically, if you can just find a spot where price is in an uptrend, right, on the 1 hour, and this had occurred, right here. Yep, right here. That's a filled green volume candlestick. On the 5-minute, you might get those like filled green and filled red volume candlesticks, but that might occur because it's just 5 minutes of trading. But 1 hour of trading is a lot more telling. As you can see here, I'm not selling any. 2020 hindsight, of course, but I'm not selling any of this because I'm not seeing any volume candlesticks that are green volume candlesticks that are just only buying, where everyone's just rushing to buy until here. And then when this occurs, this is just terrible, right? And that's one thing you can do on the hourly, to just look for those, to wait for those very, very filled candlesticks in an established trend. And like I'd said, this one was filled as well, but price was not established. All right, so that is going to be it for today's video. The strategy was looking at volume and how filled a volume candlestick was on the 5-minute and also on the 1 hour, and comparing that back to price context. So if you have any comments, questions, concerns, feel free to leave them below. Have a good day.